Hello, everybody. Welcome to the Mouthy Money podcast. We are back after a little bit of a break where we've been busy over summer with things like childcare and that kind of stuff, which I'm going to come to very shortly. I am joined today by Paul Thomas, who is head of news and content at MRM. Paul, hello.
Hello, Ed. Wonderful to be back. It's been a while.
It is lovely to have you on. We have had you on the podcast a few times in the past. The reason we've got Paul in today is because my venerable partner on these weekly podcasts, Chris Chute, is actually away on paternity leave. I'll spare him the details, etc. But we are obviously very happy for him, and it's all good news. And that kind of leads me into what we're going to kick off with today, Paul, and that is talking about childcare. Now, the reason why I'm roping into chatting about this is, well, I've been busy with childcare. I actually took 2 weeks off in August to do a bit of bridging before my son started his daycare in September. Paul, you recently became a dad as well. How is that? How are you guys getting on with that, and what's it like?
I did indeed. Yeah, it's been fantastic. You know, it's the best thing we've ever done. But yeah, no one fully prepares you for it. You know, when you think you know, 1 minute you've absolutely nailed parenthood and they sleep throughout the night, then they don't sleep for 3 days in a row. So we're still very much coming to terms with that.
Yeah, I mean, your daughter's only a couple of months old now, so you're still very much in that newborn phase, and it's all very new and everything's different, right?
Definitely. Lots of surprises, all of them good, except the poopy nappy part, of course.
So the part of what we were going to talk about, you're still a kind of probably the best part of a few months at the very least away from this. With obviously, I assume your partner she's away on maternity leave, isn't she? And still got that to enjoy. So I mean, for me, what's happened actually is my partner, my wife Ellen, went back to work at the beginning of August. This is something I found quite interesting. It's something her kind of colleagues and friends because she's a nurse, she works in the NHS, her kind of nurse colleagues and friends. Something I found really interesting was they all kind of get there's a lot of view out there that people in the NHS get really good maternity leave, and actually when you look at the details of it, it's not as good as you think. And I mean, Ellen could have had up to 12 months off, I think it was, but in the end only take nine because after 9 months they stop paying you. You can take it, but it's unpaid. And I mean, we weren't able to afford that, so back to work it went.
Yeah, I'm glad you said that. I thought I was being a bit greedy. So my wife and I, we did the sums. You know, we got the spreadsheet out and everything, and we were seeing, you know, what's going to be what our income is in throughout the sort of maternity leave period. And you're right, it does sort of the first bit's quite generous, I think. So that's what I thought anyway. And then after a while, it sort of falls off a cliff, and then you're thinking, oh God, right, things are going to be quite tight for a little while, and then it all falls off a cliff. And you think, oh my God, what's going to happen here? But yeah, I'm glad you said that. I just thought I was maybe being a bit too greedy and expecting too much.
This is what's been quite a funny experience for us as colleagues, because I'm kind of like 7 or 8 months ahead of you at any given moment, and it's kind of like, all right, let's have a little crib sheet here of what's coming up for Paul. Here's what you've got next. Here's what's in store. I mean, for us, it was we knew that going in that, obviously she was only going to be able to take 9 months, and we kind of planned and made sure that we saved a bit of money to kind of bridge a bit of it when she was only on statutory pay. But I mean, it really, it's been like lean months for us. Fortunately,
you've really got to have that sort of forward planning nailed down, and that is something that obviously I thought about beforehand. But it's not until you see those numbers on the spreadsheet that you think, oh wow, okay, right, we've had the foresight to save a little bit of money here, because things, like we said, things do tail off.
We do. I mean, we all talk about now, and it's a big story that I think comes back and around all the time. This stuff about having enough childcare provision for people to become parents and then, be able to go back to work so they can afford to have those, kids and be able to do their jobs and that kind of thing. And I think that's one issue. But those early day thing as well is, with maternity leave, even paternity leave, entitlement and rights these days, that upfront cost of, okay, well, you can do this, but after 6 months, you're going to have to bridge like a 1/3 of a household pay cut kind of thing. And how many people can genuinely afford that? I consider myself, and I'm sure you probably hopefully agree with me, we're in a reasonably fortunate position, with kind of, partners and our own careers, where they are. But people working on minimum wage, are they going to be able to afford that? It's just extraordinary. The numbers for me are extraordinary, and we found it hard enough, and I'm not sure if there's much of a conversation about how you bridge that in a better way. I don't know. It's a strange one, isn't it?
Yeah. I mean, I just feel I really have so much respect for those, single parent households who manage to get through this period, and particularly when they're not working, they're on reduced earnings. They may or may not have family around. It's pretty tough. So I try not to complain too much about my own situation, knowing that there are a lot of people out there and a lot worse, have it a lot worse than I do. But
so,
yeah, you are right.
So the next thing I was going to kind of talk about is what's happened with our kind of childcare arrangements, because there's been actually some stuff in the press, and actually, I was on BBC a while back. I'll put a link in the notes to that story, but talking about childcare provision where we live in North Devon, and it actually turned out that we have some of the worst like childcare provision for kind of under school age per head of child in the country. I mean, it's like some absolutely terrible figure, and we absolutely scrambled to get our childcare arranged. Actually, no, what happened is, look, we work in it. I work in the personal finance space, so you're kind of aware of all the things that are available, and there's lots of stuff available there. What we did was we got childcare arranged when Ellen was still only 4 or 5 months pregnant. I mean, we were that kind of on it. Like, we're talking about getting something arranged for the best part of a year, of 9-10 months after she had given birth. And this was, she was still pregnant. We arranged a childminder for 3 days a week, and that was kind of perfect for what we wanted. And then at the beginning of this year, because of the changes the government made to the childcare hours provision, the childminder basically rang us up and said, look, because we didn't have a formal agreement because we hadn't put a deposit down with her or anything, she got in touch and was like, look, because of the new hours provision coming through, my current clients, so my current children who I look after, they're all wanting hours extension, so I'm not going to be able to absorb your son's hours. And it was like, oh God, that's an absolute disaster.
Yeah, panic stations.
Yeah, and so I mean, we ended up like scrambling around. We found a childminder to take him 2 days a week. He goes to nursery 1 day a week, which is probably not an optimal for what we want. You want him to have continuity with what he's doing. And then Ellen has managed to kind of wrangle her hours around, so she works 30 hours a week, but she stretches hours 3 days a week to make up the difference, so that she's only losing 1 day's pay, and all this kind of stuff. And it's just been it's a minefield getting it right and being able to get ourselves into a position where we're able to afford to do it. We're getting help from grandparents as well, which we're fortunate that we've able to move closer to them and that kind of thing. But it's just, I don't know how parents who don't have some of the flexibilities that we have are able to cope. It's an extraordinary situation. It's different for you guys, though. You're in Wales and you don't get the 15 hours provision, right? The 15 hours is great for us. It pays for a day a week at nursery, but you don't get it, do you?
Yeah, so you're absolutely right. Firstly, you terrified me because I haven't gone as far as you have an arranged provision. That is definitely something I'm doing after this call, by the way. But
Nice.
Yeah, you're absolutely right. So we're not in the similar sort of, we're not in the same situation as it is in England. So as I believe, you'll get 15 hours from now. Is that right?
9 months, yeah, effectively.
30 hours from next September. So in Wales, it's 3 and 4 year olds. That's when the free childcare kicks in. Then largely is a similar offering. But yeah, unfortunately, there have been some murmurings about whether or not the Welsh government will follow suit, follow Westminster, and introduce that for children as young as 9 months old. No word on that yet. So my Sophia, my daughter's grandparents, they probably don't know it yet, but they're going to be getting some calls very, very soon about which days of the week they are and aren't available. Let's put it that way.
You heard it here. You heard it here first, an exclusive on the grandparental care situation. No, yeah, it's kind of I don't know. I've been very frustrated by the whole thing, and I think there's a lot of parents out there who kind of agree with it. And part of the issue is we're all too busy trying to do our jobs and look after our kids to actually get out and say anything about it. And obviously the extension of the hours and stuff in England has been great because that helps us, but it doesn't do anything to improve the kind of supply situation either. And the government's really good at increasing this kind of helping with paying for the demand side of stuff. And then they say all kinds of mealy-mouthed stuff about, oh, well, we're going to do this and that to try and increase provision, and we're going to, do funding and all this kind of stuff. And there's nothing very clear about it and nothing concrete. So I think I'd be really interested to see if Labour has anything to say on it, particularly around the budget coming up in October. Is it October? No, it's November, isn't it?
Yeah.
I'd be interested to see if they have anything new coming up around that. But speaking of budget, the one kind of super topical thing we were going to discuss today, and it's a lovely controversial one, which you've agreed to let me discuss with you, and it's all over the news today as we're recording on the Tuesday, and that's the cut to the winter fuel allowance, isn't it?
My God, yeah. I mean, I was actually on holiday when this was announced, and paternity leave actually when this was announced, and I just couldn't believe it. I'm just thinking, this is old ground. You probably heard this opinion before, but why rush out the announcement? It's something as highly controversial as stealing money from pensioners, and what sort of image that sort of creates in your mind there. Sort of like Scrooge-like new government coming in and picking on the sort of supposedly weakest in society. It's just mad. Why wouldn't you wait until the budget and throw in a few sort of tax giveaways or whatever, some positive news in the budget, and try and offset some of the reaction, because it's been pretty explosive, hasn't it? Right across the political divide, people are against this, even though they probably will get through the vote, just purely because they've got such a large majority in the House of Commons. But it just seems like a massive, a bit of a PR fail, an unnecessary PR fail.
Yeah, I mean, perhaps not worth dwelling too much on the politics of it, because the politics of it are pretty toxic. But the kind of what's interesting is the government. I think they decided to push that through early on because they looked at it and they were able to make the change with secondary legislation, so effectively don't have to put it to a vote in Parliament. And what's actually happened today is they've basically been caught like hook, line and sinker by an opposition day motion from the Tories. So the Tories are doing good parliamentary, tricks here, basically forcing the government to have a vote on it. It creates an early flashpoint. They've got a big majority, but there's going to be a rebellion of some description, whether it's just MPs not showing up for the vote. They will win it, like you say, but the clamoring is pretty, it's creating, political problems of their own making, and it hasn't taken them long to get to that position.
Yeah, and they've sort of boxed themselves in a corner, haven't they? So
yeah,
I know. They sort of campaigned on on fiscal responsibility. They wanted to be the party that could steer the economy after the sort of upheaval of the last 14 years, and I totally get that, and the Tories throughout the election campaign were trying to beat them across the head with their you're going to tax the country more, and obviously they've been forced into this corner where they said they're not going to tax working people, so reversing the national insurance cut, which I think is worth like 9 or 10 billion a year, which is half of that black hole, the fiscal black hole that Rachel Reeves says that we find ourselves in, and then this reversal is going to rake in sort of 1.5 billion. So when you offset them, you think, God, actually, what would make more of a difference? But clearly, doing, reversing NI or taking away with the winter fuel allowance are both incredibly controversial. So I understand the position Rachel Reeves finds herself in.
The national insurance thing is really interesting now, and the more you look back at it, actually the cut, which, I mean, a lot of people said, like, why are you doing this? This is weird, sort of thing. It's like a weird thing to cut at the current moment in time. The more you look back at it and you think this possibly, I mean, I don't know if they operate on this deeper level, but by doing that cut, and Labour very careful not to be having a go at working people, because, let's face it, working people are the single largest demographic in the country of voters, ultimately. So they can't touch that. The Tories, by cutting national insurance when they did, have created this toxic situation for their Labour to try and unpick now. The solution to that, of which is looking increasingly like they're going to start taxing. If you can't tax incomes and earnings, you have to start going after wealth, and that can come in a number of different ways. And there's a lot of suggestions about how that could go, isn't there?
Yeah, definitely. Yeah, so you've got particularly the sort of more right-leaning papers, without naming them, firmly they firmly believe that Labour is about to come for CGTs, or capital gains tax, or inheritance tax, or all of those taxes really that don't affect probably the majority of the population, but the people who have accumulated, not even vast sums of wealth, but a reasonable sum of wealth, or who have dividend-paying investments, or large investments that are outside of a tax-free wrapper like ISAs. So I mean, those are the things that are probably obviously far less controversial than taking the winter fuel allowance, or means testing it. Sorry, so some people will get it. But people on pensioners on pension tax credits, or benefits. But obviously that leaves the people at the margins. The people who, they're not claiming benefits, they are retired, they can't sort of increase their incomes easily, but they're just about okay. So those are the people who will be affected by this policy, not the people, not the people sort of who have vast pension wealth or property wealth or large investments that they can rely upon to sort of pay these bills. So those are the people who are really going to suffer.
Yeah, the thing I find interesting well about the winter fuel thing is, obviously, as you say, they're still going to means test it. And the big issue with the means testing is people at the margins who don't meet the requirements, who fall through the cracks, kind of thing. But it's also the fact that it's to do with energy and energy bills, because energy bills in the past 2 years have been kind of the be all and end all of the problems we've had. And that hasn't really gone away. Energy bills have gone down, from what that kind of astronomic level that they were going to get to at one point, but they're still not back to where they were pre kind of, COVID, post-pandemic crisis and all this kind of thing. So it's very contentious. It raises issues about, that whole heating or eating thing. Pensioners and everybody has felt the pain of rising energy bills. So going after something that is supposed to dampen that pain, it's just, I don't know. It's just, this whole thing is going to rumble on, and it's such a big problem.
Yeah,
and then you look at. Sorry, go on.
No. Yeah, you're absolutely right. I mean, it's just like I said, that the images that conjure. If you're a political cartoonist, on the day that was announced in July, you're going to have a field day with that, and there is no other news in the world, very few stories in the world that are going to trump that in terms of being worthy of cartooning. But you're absolutely right. I mean, bills are higher. So I was running through, as being a giant nerd, reading through House of Commons research paper the other day. And while energy prices have come down quite a bit, they're still at 30% on pre-COVID times, and that's a lot of money. It's not, I'm still looking at the bill and saying, God, how am I paying this now? When 2 years ago I was paying, like I said, a third less than this. So it's, it is tough, and you always, every time it leaves the money leaves your account, you sort of begrudge it a little bit and say, God, this is significantly more expensive than it used to be, and like you said, that whole eat or heat. That if you're so inclined, you're a newspaper editor and you're right leaning and anti-Labour, then you're going to have a field day with that sort of imagery, aren't you? So, and obviously,
there's been a bit. I mean, for keeping on kind of pensioners before we move on to Paul's expert area, which I'm very excited to move on to that. But just the last bit was,
glad you said I had one.
You're a man of many talents, Paul. But we love you for your mortgage chat as well.
You are making me blush. Thank you.
So the other piece of news that we had today, because of the latest earnings data coming out, was the state pension is going to rise by £460 a year from April, isn't it? So there's a little bit of cushioning there for obviously for pensioners who are in receipt or going to be receiving state pension by the time that kind of uplift comes. But it amounts to, like an extra £8 a week or something like that. It's not, we're not talking huge amounts of money going up. And that's obviously a function of the triple lock. So do you think, is that going to help? But it's not really going to soften the blow very much, is it?
No, look, long term, obviously, people will be pensioners will be comforted by the fact they're going to get an extra £460 a year. But the problem is that doesn't kick in until next April anyway. So we have winter between now and then, and they're not getting that £200-300 in their account to pay with increased energy costs. So people will be looking at it and seriously thinking, how on earth am I going to afford this? I think the main thing for me is obviously don't panic. I know it's easier said than done. I'm not in that position. That's the payment's not been taken off me. But there are for a start, sort of, if you look at your energy account, you'll notice some months, particularly in the summer, you'll be in credit, and other months, you might have a lot less money in that account because you use more in the winter. So hopefully over time that would even out. But I think for me, the most important thing, if you are struggling with that, then speak to your energy provider or Citizens Advice, and because I know there are plenty of grants out there. I think British Gas has their sort of an energy trust where you don't even have to be a British Gas customer, but you can get help with your payments if you're struggling. So look into those sorts of things. And I always find it a little bit patronising when you tell people how to make their homes warmer. So I'm not going to do that. But obviously, there's loads of free hacks you can do to make yourself to make the home warmer without spending much money. Spend thousands on installations. Do whatever you can there as well. So but yeah, I think it is concerning. But I think probably the message of people out there is there's help available. I don't think anybody's intentionally leaving anyone go to the wall and freeze in the winter. So don't be too proud to ask for help. Essentially, I think that's probably the decision.
Yeah. So we're moving on to as I mentioned just a minute ago. Moving on to our final topic, one which I can already see Paul rubbing his hands in glee over. We're going to talk a little bit about the property market and mortgages, because it's been back in the news since we last recorded a podcast. So there's a couple of things going on here. The first thing is we had the latest. So we get lots of these every month. There's several of them, and they all take it all as in the round kind of thing. But Halifax had its latest house price numbers, didn't it, on Friday? Market's getting a little bit better. Prices going up to kind of, what is it, 2-year highs?
Yeah. So if you rewind back probably 2 years ago, when interest rates started rising, then there were so many predictions out there that the market was going to tank by 30%, and like you said, that just hasn't happened. We did see prices come off a little bit, but if you, like you mentioned, the Halifax figures there, on an annual basis, they're up 4-6%, and they're only about £1,000 off. But this is averages we're talking about. Depending on where you are in the country, what property type may be different for you. But on an average level, then they're £1,000 off their all-time high. So the market has proven ridiculously resilient. It outperformed pretty much all expectations and predictions. So it's nowhere near as bad as people thought.
So I mean, you and I are in a similar boat because we also, I mean, for listeners who were not aware, you and I also, we bought houses at the same sort of time. We both got on the property ladder right at the kind of top of the market, wasn't it? Like, I got like a pretty good rate. We got a good rate. I mean, I got a good rate. I don't know. I'm not sure what you guys got, but we've then sat on it, and the first time when you hear that story of like, oh, house prices back on the up, that's good, that's exciting. First thing I did was, get onto Zoopla and start like doing the little automated checker thing, and it's like, oh, it's still a little bit lower than what we bought it for. Okay, all right. But then I don't know if you, I think you do. I don't know if you do it, but on my Monzo app now, I've like added my mortgage in on the app, so I can go on Monzo and look at it. And Monzo do their own property valuations. I couldn't figure out who they get the valuation for. I'm sure they're not doing it themselves. But Monzo's is about $5,000 higher than the Zoopla one. And I was like, yes, great. Monzo thinks my house is worth good money. This is excellent news.
Yeah, I'm the same boat as you. So I mean, we've been writing about mortgages for 14, 15 years, or whatever it is. Don't count myself as an expert, but I think I know a little bit about it. But yeah, absolutely, bought at the peak of the market. Just as the Liz Truss mini budget fiasco sent interest rates sent fixed rate mortgages spiraling. So yeah, basically all the things you shouldn't do, I did. But anyhow, nice. It's life, isn't it?
Can't beat home ownership, right, PT?
Yeah, absolutely. Just as fun as it sounds.
But there's more to it here, isn't there? Because interest rates are starting to come down, and that's starting to put a little bit more of a swing in the step of the market. Would you say that's fair assessment?
Yeah, absolutely. So the problem we've had over the last 2 years, obviously, is just to clarify one point. I'm sure readers, listeners have heard me say this before, but interest rates are not the same. So interest rates have an influence on fixed rate mortgages, but they're not sort of completely linked. So you've got something called swap rates, and I won't go into what they are, but essentially it's what the market expects future interest rate, Bank of England base rate to be. And in short, those swap rates ultimately determine how much banks and building societies charge for fixed rate mortgages, and those swap rates have been coming down quite significantly over the past sort of six months or so. So we're in a position now where in fact just before this, I was having a look at what was the cheapest mortgage on the market this time last year, and there was a big hoo-ha made in the press about the fact that rates have dipped below 5%. It was at 4.99, and now you're looking at sort of 3.7ish. So they come down quite a lot, and that is the difference between the market, the property market gumming up, people looking at it and going, can I afford to move? If you look at the difference between, so say you take a 250k mortgage over 25 years, which is pretty typical, and you're at 4.99% and you're at 3.7%. The difference in that is about 180 quid a month, and that could be a deal breaker for a lot of people, me included. I'd have to seriously look at my outgoings if my mortgage went up another 180 quid. So it definitely is. It will grease the wheels of the market. And part of the reason why we've seen house prices come up is partly to do with the fact that interest rates have come down and the transactions are picking up a little bit, but also as well we've got a lack of supply in the market, which naturally keeps houses, the whole supply and demand, law of supply and demand. When there is a lack of new homes coming to market, and that's improving a tiny bit, I believe, but it naturally keeps house prices higher, which is why we haven't seen this God Almighty crash that a lot of analysts and observers were predicting.
So the thing that part of the thing as well, though, is that it's not in kind of pure numerical terms a crash, but if your property doesn't move in value over 2 years and the average earnings have increased by, I think it was the data this morning was 2.2% year on year real terms growth. And then if you put that over, 2 years, the real terms earnings growth for, an average worker has gone up a fair bit. Obviously, we've had cost of living crisis and inflation, all that kind of stuff. But relative like affordability is better now. I think, if house prices haven't really moved in 2 years, but everybody's earning more money, then that means, affordability is better. And now if mortgage rates are coming down, then that's kind of going to open things back up again, isn't it? It's people are going to feel like they've probably got that extra capital to put down into something.
Yeah, you're absolutely right. I think the thing with obviously real wages in 2022 and a bit of 2023 took an absolute hammer. When prices are rising as high as they were and as quickly as they were, and wages were looking pretty stagnant, then you feel it in the pocket. You feel less rich. You can't buy as much as you used to. You have to sort of tighten the belt a little bit. What we're seeing now is all wages catching up a little bit. I don't think we're fully over. Inflation rose so quickly and stayed high for quite 2-3 years now. We're looking at. I don't know about you, but I don't particularly feel when you see that number that wages are rising 4%, and after you account for inflation, that's an increase of 2.2%. I don't feel particularly flushed. So it's not. Yeah, the situation is better. But having said that, the fact that mortgage rates and interest rates are coming is absolutely a positive. And in terms of affordability, whether or not you can afford that mortgage that house you want to buy, or even remortgaging, there will be people out there who will be on 2.5% mortgages, and they come to remortgage now. That was 5 years ago or something. They come to remortgage now, and they realise that actually, with the equity they got in the property and so forth, they may see their mortgage repayments go up a couple of £100. That's a bit of a stinger. So things aren't the way they used to be. But it is getting better conditions. Tentatively speaking, things are getting better, and people who are going to renew their mortgage or to buy a home now will be in a much better position than those who were looking to buy a year ago, or remortgage a year ago, when mortgage rates, were over a percentage point or even higher, more than they are now. So the situation is definitely improving.
The kind of last thing on this was, you mentioned that 3.7% rate, which is kind of best in market, but people shouldn't expect to be getting that yet, should they? That's kind of like, who's getting that kind of rate? It's people with higher equity to loan ratios and that kind of thing, isn't it? Like, we're not quite that good for everybody yet, are we?
No. Yeah, I don't. If you've got a 5% deposit, 10% deposit, I don't want to dash your hopes, but you're not getting that rate. that is not on the table for you. Okay, so I'm in that position. I'm nowhere near that rate. That's it's not for me, unfortunately. You're right. So you're going to be looking at sort of 40% deposit, 50% deposit, or equity in your property if you already own it, in order to qualify those. And then obviously it's not guaranteed. You've still got to pass the lender's credit scoring. That you'll go through what's called an affordability process, where they have a look at what you're earning. If you've got a partner, what they're earning, what you have. And all those ins and out, incomings and outgoings in terms of cash. And they'll make a judgment call on whether or not you qualify for that product. Another point to mention as well is you may not get. You may see that the lowest rate in the market is sort of 3.7, but it depends. If you go through a broker, then you may get charged a little bit more. So this is called, and brokers and mortgage advisors hate this, but it's called sort of dual pricing, and it's sort of largely disappeared from the market. Until it was very much a feature of the market 10 years ago. Then it sort of disappeared, and most people use a broker. So and there was no difference really in what you charged if you went direct to a bank or if you went through a broker. But that's starting to creep back into the market, and we're not talking huge differences. It's not the difference between 3 and 4%, but it'll be 3.7, 3.5, that sort of difference. Which is pounds and pennies on a depending on what property you buy and how much it's worth. But it's not going to cost you much more on a monthly basis. But it is, that difference is there.
Who's making that? Lenders. Who's making that dual pricing decision? Is it lenders who are offering direct to customers a better rate and then just giving the broker a slightly worse rate? Is that what's happening?
Yeah. So I mean, we're in a situation now where lenders are so reliant on brokers. So it's something like 9 in 10 mortgage cases go through, depending, it's higher for first-time buyers, lower a little bit for sort of remortgage, or if you're going to buy a home and you're already a homeowner. Not much though, we're still talking sort of 9 in 10 cases, come through a mortgage broker. So, I go to a mortgage broker, they find the best deal for me, they place me with a lender gives me the money, everyone's happy. And at what lenders, so lenders, brokers probably won't thank me for this, but they're a bit of a necessary evil from a lender's point of view. A lender wants to get that client for as cheaply as possible, and they've got to pay a bit of commission to the broker. So if they can get away with not paying that commission to a broker, and attracting borrowers to them directly, they save themselves a little bit of money. So if they need to sort of reduce the rate a little bit, then so be it, sort of thing. And yeah, it's not super prevalent anymore, but it is there. But that is ultimately the reason. They think they save themselves a little bit of cash by getting borrowers and cutting out the middleman. So but what I would say with that, if you're a borrower, A, the savings aren't that great anyway, and B, I mean, trying to navigate the mortgage market and by yourself, I mean, it's a minefield. Each lender has different criteria. So, to give you an example, some lenders are absolutely fine if you're buying a 2-bed flat above, a pizza shop or a kebab shop. They're absolutely fine with that. Other lenders don't like it. So, you've got to know all of this sort of stuff. And some people treat, if you've got a second income, they'll treat it differently. So, some will take all of your second income into account. Some will only take a fraction of it. Some will disregard it altogether. And it's all these sort of things, unless you're really willing to put the time in and you understand this sort of stuff, then I definitely recommend going to a broker, a good broker, one who isn't sort of, who can scour the whole of the market. So that's an important point to make as well. Make sure they can look at the whole of the market. Ask them about this up front. Ask them if there are any fees. Ask them what they'll be getting from the lender as well. So you're well within your right to ask this sort of question, and they should have this in their disclosure document anyway. But ask all of these questions. But what it is a time saver. They will look at the market for you. I don't know about you, but I've got better things to do than sort of look at 20 lenders' websites and see what they will lend on, what they won't lend on, how they're going to treat my income, how they're going to treat my partner's income, whether or not I have to offer up the dog as collateral. Do you know what I mean? They don't do that, by the way.
I disagree with you, PT. I've got all the time in the world to trawl through all these mortgage websites and look for a good deal. No, I'm joking. I think your point about the broker is really important. And I mean, we use a broker and it was great because it's kind of like they take the stress out of it for you. And actually, quite a lot of brokers don't have a model where you don't pay as the customer, you don't pay anything to them. They're getting a commission back from the lender ultimately to arrange that mortgage for you. So some will obviously charge a fee, but so it's kind of important to shop around in that sense. But yeah, I mean, most people use them, and that's for a good reason, right? Ultimately.
Yeah, definitely. I think it wasn't always that way. There was a time maybe when the mortgage market was a bit simpler, where most people thought, what, actually, I'm just going to go directly to my lender. And people, you can. So if you're already a nationwide borrower, for argument's sake, you bought your first home 2 years ago, your 2-year fix is coming up for renewal. You may think you want to go to a new lender and get a better deal, or nationwide. I'm just using them as an example, but any other lender out there may say, actually, Ed, we've got all of these rates here. You don't have to sort of jump through the hoops to go through a new assessment, a new credit scoring process. If you accept that, we'll just roll on with it. And, a lot of people, loads and loads of people are doing that now. It's what's called a product transfer. So, you don't necessarily have to get advice. I would recommend getting advice, but just to see if there's anything cheaper out there. But, a lot of people are self-selecting that sort of stuff, remortgage customers, sort of refinancing customers anyway.
Yeah. Brilliant. Lots of really, really useful little tidbits there for anybody trying to get a mortgage or with a mortgage and all that kind of stuff. Paul, thank you so much for joining me. I believe I'm going to rope you in for one more before we get Chris back online. So thank you.
No, absolute pleasure. Absolutely. I obviously love this every single time I come on it, especially when you get me talking about mortgages. So yeah, more than happy to come on. If the listeners will have me back on, that is, they may decide to hate me, but we'll deal with that next week.
I'm sure they will. Thank you everybody for listening in as ever. Just as a reminder, you can catch us on all the big social media channels. The podcast is on Spotify and Apple and YouTube. And don't forget, of course, Mouthy Money website. Sign up for the newsletter to get the weekly updates and all the rest and in between. And with that, thank you everybody and goodbye.